presentation and try and understand what he has to say and understand the basics of it.
Yes.
And then all these questions that we have in mind, and I think there is a way to kind of approach those questions.
Right?
And I guess 3 hours is too short for it.
No problem. Not at all. So we get an idea about the difference between the gross profit and the net profit. Why this is important is more important than knowing what is the difference. Okay, so in your business you have to completely understand that I will spend 1 lakh a month. That's the minimum I have to spend just to stay alive. Okay. So if I have to have a lifetime of 6 months, I need 6 months, 6 lakh rupee to start my business. Okay. So that's the kind of understanding you have to have completely. There will be complete uncertainty as far as revenues are concerned. So I've been asked so many times that how do you calculate your revenues? You don't. Your customer decides how much you earn, when you earn it, how much you make profit out of it, those kind of things. But the cost part, you have to be very certain. As an entrepreneur, if you are very clear about what your cost will be in the business, how the cost will grow based on the business volume or on your revenue, or maybe you are opening 10 offices, those kind of operational plans or your manpower plans, then would an investor be very impressed. Okay, so that this guy knows how much money he needs, when does he need that money, how will he manage the cash flow in the business. Okay. So these are the concepts which are very important as far as starting a business is concerned. Okay. So we'll move on to what would be the financial projection, for example. So people ask for 5-year financial projection, and every entrepreneur is in a confusion how to answer these questions. Okay, so it is always good to make a start. Okay, never by going to say that yes, the market is this much. Okay, so let us say the education market is $40 billion, and I want to become a 1 crore kind of a revenue and 10 lakhs profit in 5 years. That kind of a plan will never fly in front of an investor. Okay. What would do well is a monthly kind of a projection. We can quickly move on to the financial planning part. I'll just take a...
I'll just ask a small question out here. I mean, do you think 5-year projection plans are actually work out at the end? I mean, the market scenario changes, everything changes.
Okay.
Inflation came in, you never know.
Yes. Good.
Projection.
So
the whole world actually turns off.
So again, coming back to my original statement, there will always remain a worst case scenario and there will always remain a best case scenario. Okay. So without getting into debate of from an investor, he will always look at, in the worst case scenario, this is what your valuation is, or this is what you should do. Okay, you will know about your business, and every business is dynamic. It is not that once you put it on an Excel sheet and this is the way it will run forever for the next 5 years. But yes, it always helps to start with some kind of a plan.
David decided to go in war with China, everything goes.
Yes, so that's a rare case scenario. So between worst and worst, there is a rare case scenario also. Okay, so but that is not what we are going to consider. As far as planning is concerned, we need to understand what is required to start my company, what is required to run my company. Okay, these are the questions which are important, as much as for yourself, as much as for the investor. Okay, so this slide is clearly visible to everyone. So we just take quickly what are the. So this is one simple format. I will share it with you. Okay, this is just to denote a few, don't go by the numbers, they may not be perfect or exact, it will vary with your business. Okay, so as we said, the first point, the units sold into price per unit will determine the top line. This is what we call as the revenue of a business. It can be sales, it can be turnover. These are the top line, sales, turnover, revenues. These are all the same terms for the same definition. Okay. What you get to the next level is your variable cost. So coming back to the same example, if you are selling a pen, you will have a metal cost per unit, you will have a courier cost and packing cost per unit for any one commodity or product that you are selling. What is the gross profit? The first month of the business, you didn't sell anything, you are still in the process of setting up your manufacturing and your supply chain. What happens is you are not earning anything. So what are the fixed costs in your business? These are the fixed costs. So salary you have to pay, the person you have to pay on the first of every month. Marketing you do initially. If you have decided that I will spend this much money, whatever comes, this is the fixed cost in my business. Maybe the rent, you have to pay the rent every month. Okay. If your office requirement increases and you have to take a temporary go down, for example, based on the volume of your business, then it may become a variable cost. But so these are all the, so as I discussed, there will always remain a gray area between how you define a variable or a fixed cost. Okay. So just for clarity, we have taken rent as a fixed cost. Telephone and electricity, again we are saying that yes, this is the minimum that we need to spend to be a part of the business. Website maintenance, for example, development may be a one-time expense, but maintenance is a monthly expense. It doesn't start from first month itself. When you develop the website, you don't start maintaining from day one. Okay, so that's why it is kept at 0. So, okay. Yeah. So what is the first level? You get a loss in the business. Okay. So you have fixed expenses. Now what are the one-time expenses? This I am taking separately as a special case solely for startups and entrepreneurs. Okay. So one-time expenses could either be a variable